Good morning, everybody, and welcome to the latest latest instalment of SFI Live. I'm Jay Evans. I'm your host for today. I'm joined by Tony and Holly, which I'm sure some of you have met before, but we'll do introductions in just a second. This is a fully interactive webinar, so in the chat box on your right-hand side, do feel free to put any questions to us. It might be that we get to them a little bit later on, depending on the content, but do submit your questions. It's very kind of you all to answer the poll. I've seen quite a few people have done that. If you haven't, there is a poll just asking you what you would like our next webinar to be. So do feel free to vote in that, and your votes will count. We'll also be doing that across social channels to decide what we're going to talk about next time. So before we go into anything else, we're here to talk about self-build mortgages today and two new products that have come to market on a large loan basis. So we will be delving into those as well with Tony and Holly. But first, how about a little introduction for those that haven't seen you before? Tony, we'll go with you first.
Yeah, hi, I'm Tony Hall. Delighted to say head of mortgages now, not interim. Thank you, Holly. At least it's one bit of applause. So delighted. So I've since recently been appointed as permanent, which is great. But I've got over 30 years experience in financial services and a strong background in specialist lending.
Brilliant. Holly, good morning.
Morning. So I'm Holly, intermediary team leader, so I look after our BDM team at Saffron. We have, as many of you may have noticed, we have expanded the team recently. So we have two new field-based BDMs, Phil and Simon. I know Phil was on the last webinar, and we've also increased the telephone team size, hoping to do that a little bit more in the future as well. So yeah.
Brilliant. Introduction out of the way. I don't work for Saffron, I'm independent, but I'm here to answer all your questions. So stick all your questions into the chat for us, and we'll get around to them as and when we can. We're going to do an introduction into the products in just a moment, but I'll be very pleased to say we've got a lovely comment from Self Build Magazine, and we've got some details from them on how the market stands and why, as intermediaries, as brokers, you should be looking at this market in the future. For those of you unaware, Britain lags quite behind on the self-build market. Lots of other countries, certainly Asian countries, Germany predominantly very good as well, have a very high level of self-build in their market. We don't. We fall way behind that. However, recent analysis has indicated that self-build completions in 2019 were around 7 to 8% of overall completions, but accounted for about 12% of the housing output. So it's quite high. It's a lot higher than you think it is, and that's creeping up. And obviously, as we move into a greener lifestyle and people are very conscious about the buildings that they inhabit and trying to look to reduce and net zero those emissions by 2050 or 2030, depending on who you're believing, self-build offers the opportunity to create a home that is as energy efficient and sustainable as you want it to be. It can be made with recycled construction materials. So there's lots of opportunities there, and we'll talk about that and the restrictions that those kind of build types have with Saffron products, which I have to say is a lot less restrictive than other lenders in the market. So it's declined slightly in 2020, down to 8%. About 13,900 new homes were built by families looking to live in their own property, built to their own specs. But this is looking now like it's going to increase massively. So what we're hopefully going to do today is give you some insight on how you can take advantage of that for your clients and how they can get involved. So fingers crossed we'll answer all those questions. So I'm going to hand over now 2 questions. So that's enough of me chatting. I'm not here to chat. It's down to the guys for that. So shall we start off? Holly, can you explain what a self-build mortgage is and how it works?
Yeah, so for self-build, self-explanatory. So it is for somebody to live in. They're building their own residential home or residential second home, but it's not for the purposes of building and then selling it on. That's in our development finance arm. So ours is solely for the purpose of building a property for them to live in. But with Saffron, our self-build isn't the standard. It doesn't have to be your standard plot and build upwards. It can be a knockdown rebuild, a large renovation, changing the existing footprint. There's a lot of things that fall into our sort of definition of self-build and the different types of projects that we'll consider.
I think it's important because obviously it does have the self-build title, but it can be a conversion as well. I think that's really important to bring that out, isn't it?
Yeah, definitely. And especially with the conversions or large renovations. So it could be 2 properties moving into one. It could be they're moving it from a bungalow to then adding another story on the top. Or it could just be a property that they brought is not habitable and they need to bring it up to the spec that's habitable and obviously something for them to live in. So it really, can encompass a lot of different things.
Okay. The government are behind us on this. They, in April, launched the Help to Build scheme. We've all heard about the Help to Buy scheme, but less publicised is the Help to Build scheme, which is, them giving us incentive to build our own homes. And I think the government have realised that it's an economic way of bringing the economy back up, but also into house building. But it's not for the resale. This is for them to live in only. Is that right, Holly? So we're not looking at someone who's going to build that product on.
Yeah, so ours is purely for the purpose of them living in the property.
It's worth noting, if you have got clients looking to build to sell, Saffron can still help with that, but it comes under development finance. So if you look on the Saffron website, the Saffron Builder site website, you will find details and get in touch with that team if you've got a client that's looking to sell on. So I just sort of drop that in there. Tony, how do you think the Help to Build scheme, nearly did it, Help to Build scheme is going to benefit those that are looking to do it?
Well, obviously the scheme is going to help because it's going to provide access to higher levels of funding than previously. And I think it hopefully will, because there's a lot of people with their names on land registries and things wanting to build houses, but for a lot of people it's still that aspiration that's kind of that, wouldn't it be nice if, it's a conversation me and my wife every day have about living anywhere else but where I live, so it's kind of a dream, whereas I think this scheme brings that one step closer for people.
And the scheme is targeted at the everyday sort of 3-bedroom family home, isn't it? It's not your grand design. So we're talking, your run-of-the-mill build that's just slightly to the spec that you'd want it for your family, maybe. So yeah, and I think because there is an opinion that it's all kind of very much grand designs, big builds, like completely bespoke plans. But actually, there are other options. Tony, don't you agree?
Yeah, definitely. I mean, that we'll come on to this. I mean, it's very much like custom build is more for that market, really, in terms of getting, a professional developer to build your house to your specification is the perfect scenario, really for a lot of people that, any house buying program you watch, people talk about compromise whenever talking about buying a house. Well, obviously self-build and custom build removes that because you can build exactly what you want and what you want it to look like. Obviously, you've got to be mindful. You've got to be mindful if you want to sell it. It can't be that weird because not everybody wants to live in your wonderful, I suppose.
Yeah, and I think there is a fear, isn't there? That you're going to build a house that's like we talked about this on the last time we discussed this with a glass frontage. It might be that you want to be an exhibitionist, but the next person who moves in might not want to be. So just on that, so on the Help to Build scheme, Dean's just asked this question. I think I know the answer, but it's to support a new build of a home, isn't it? So what the government have done is basically looked at the brown land that's available and said this needs to be used and worked on. Because obviously there is a conscious effort not to go into greenfield and take up new pieces of land, but there is brownfield out there that needs to be used. The Help to Buy scheme, Help to Build scheme, I keep doing that. Help to Build scheme is designed to fill those brown spaces, isn't it? And with a newly constructed home, it's not for extensions or changes to existing buildings.
That is my understanding. We can confirm that to people later. I'll be honest. Our senior product manager, Laura Bright, is kind of leading our position on this. So I'll have to defer to her for all the exact rules on the Help to Build. But it is something that we're tracking and we're working with the Building Societies Association along with a lot of other lenders to understand, the reality of this product. It sounds great, but there's always the devil's in the detail. So we're currently going through that detail, and it's, but as a self-build specialist, we are really keen to support these markets.
I think it's important to note that, isn't it? The government make these decisions, but we don't necessarily know what that product is. This Help to Build scheme, until it's released to what our viewers will see, that's all we see. It's not that we have inside knowledge. And when it came to Help to Buy, they partnered up with the big lenders, and that was their format. And then obviously societies were following suit and looking at 90%, 95% options. This is very much the same. This wasn't something that was organised with the Building Societies Association. It's just a scheme the government are doing to push the economy forward, isn't it? It's really important there. So let's start from the beginning. Okay, so Holly, I am broker number one. I'm coming to you. You've got a client that's looking to self-build. What do I need to know? What do I need to do right from the beginning before committing to complete an application? What do I need them to have in place?
So I think it's really providing that guidance to the applicant to know exactly what they're looking to do. So many inquiries that come to us, they might not know the plot value. So for example, if it's a knockdown rebuild and we're helping them purchase, so they're knocking down the existing house that's there, the value of that house won't withstand. So you'll have to go under the plot value. So it's knowing what that plot value would be if it's completely clear and got the full the planning permission. And then it will be looking at the construction types, what kind of contract that they're under with their builders. So is it a JCT contract, which protects us a little bit more because it's fixed and we know that costs aren't necessarily going to overrun? Because that's one of the big things with self-build is that, you know, we've all seen the Grand Design show where they've built in this beautiful property, but they are over budget, over time. So it's all of those things. It's just trying to work as closely as we can with that. So the key, real good, useful thing that we do have on our website is our supplementary information sheet. This is a really great data capture form that we require on our decisions in principle, but you can also download that and use it as a data capture form. And that really breaks down the project. It kind of asks you the questions that you want to or need to know. So it'll be, you know, what kind of funding are they looking for? What the build cost? How much of a deposit do they have to input into it? You know, what construction type, what warranty? All of those questions that we sort of need to get down on a bit of paper, and it will really start to build a picture of what they're looking to do. You know, testing affordability, you run it through on the normal affordability calculator on our website. And yeah, it's just really understanding what they're looking to do really. And, you know, I mentioned planning permission before. They need they can have outline planning permission at decision in principle stage, and you can apply with outline planning permission, but the case won't go to valuation until full planning permission's been granted. So that's one key thing to remember, is just where they are with their planning permission as well.
Brilliant. While we're talking affordability, there was a question on that from Roman. The main issue with the self-build appears to be the requirement for the applicant to afford both the mortgage for existing home and for the self-build mortgage. Is there any way around it that would work? So, short answer, no. We do have to factor it into affordability, because what we need to know is what their living costs are going to be, and they will be drawing down on a mortgage on this new property at the same time. So it's, you know, what impact it will have on their finances. So that's why we factor it in. But it just depends what their options. We accept if the applicants are going to live on site, if they're, you know, going to put a static home on there for the temporarily during the build, or they're going to live with family and their living costs will be going down, or alternatively, they're looking to rent out their property during the build and move elsewhere with lower living costs. So we do have to factor it in, because sensibly, you know, we have to lend the money. But yeah, there's just exploring various options with them as well. Okay, so those of you asking questions on the Help to Build scheme, I'm educating myself on your questions as we're going through, so I will get to your question in a second. I'm just looking at the finer detail on the government's announcement, so bear with me on that. Can you allow self-builds where the property will not be standard construction?
So for Saffron, one of the key things that we want to highlight today really is that we do allow modern methods of construction. So it can be insulated concrete form construction, it can be modern steel frames, Hoff houses, passive house construction methods. So the list is endless, but the key thing to remember is that we'll ask that they're either BOPAS, BBA or BRE accredited, and those sort of coverage is for a minimum of 65 years. So that's the key sort of factor on those ones. So any sort of new ones that have that accreditation, please just give the BDM team a call and we can chat through it. You know, with our self-builds, we deal with them all in-house, and we have a specialist self-build underwriter. So Karen's been with us for a number of years, and actually you can always go to her with a new construction, and when you think that it might be one that she's never heard of before, she surprises you and it's like, no, I know exactly what this one is, and is able to say yes or no. So, you know, it's part of self-build is one of those ones where we come into our own really, because we have, you know, the manual underwriting approach. We work really closely with our underwriters, even working from home. We're still being able to chat with them on Teams and ask them questions quite quickly. So, yeah.
Suntalk, I know it was a private message, so I apologize I've used your name, but the question regarding to Help to Build covering land purchases, I've just shared the full government announcement on what the Help to Build is. So I've shared the link in the chat box. So do feel free to have a look at yourselves. There's quite a lot of information in there, really, really useful. And then if that draws any questions, feel free to get in touch with us at a later date. I'm sure the guys will be able to help you. What was the accreditations, please? Jan's just asked Holly, sorry.
Yes, it's BOPAS, BBA or BRE.
Hopefully you got that, Jan, this time. Nice and slow. We'll do that slower next time, Hol.
Sorry, I'm so bad at speaking quickly.
Just imagine people scribbling away trying to get it down on paper. Question from David. Please, can you give the name of the lady to speak to about self-build non-standard construction?
Yeah, if you just contact any of the business development managers, including myself, just give us a call on the main phone number and we'll be able to help. And if there's anything that we need to raise to our underwriters, we'll contact them directly and ask them the questions for you.
Do you think it's a good chance to bring up one of our SSPs, Tony, with regards to flexible lending and the way that you work in-house? So perhaps bring in a few of those if you can, Tony, for us, just to help them out.
So in terms of the...
sorry, the full product range. So the way the Saffron works with underwriting and the way the process now is quite manual and bespoke. Maybe
sorry, I was
trying not to give it away.
I was dreaming of that house I want to build. You know, sorry, I was going back to that. Apologies. So I'm back in the room, everybody. I do apologise for that. Now, you know, the beauty of Saffron is that we are 100% manual underwrite. So that, you know, and that doesn't mean that we're paper based or clunky. It's all online. It's all you know. But we let humans make the decision, and that allows us then to make common sense decisions across the board. So every single case is valued and assessed on its own merits by an experienced underwriter that knows what they're doing. And therefore, actually, as Holly has said, there's a lot of the times when we'll have an opportunity where we won't be sure, and the underwriter will surprise us and go, yeah, we can do that because of our experience in this market. You know, we're very fortunate that our lending policy is, it's nice to be grey in some scenarios, and our policy is quite grey in a lot of areas in terms of we've got the underwriters have the flexibility to make a discretionary decision or even an exceptional decision that isn't in policy, but because of our experience, because of our desire to help and support, we can do that as well. So that's the key reasons. Is we're not constricted by rules or computers saying no. We will say no if it's clearly not for us, okay? But we'll give everything a fighting chance.
Brilliant. I thought I'd get that out there now because we know we always talk about that, but it was really poignant at this point. Question from Derek: can the help to build be used if the new building has been built on the title with a property on it already, building in the garden? I don't know the answer from the government perspective. How does that work on a mortgage perspective, Holly, if it was a building being built on, say, in the garden of another property?
Yeah, so we can, in general terms, we can consider that scenario. The key things we'll be asking is whether they've got any shared access with the existing property, what that existing property is going to happen on completion once the build's been signed off. So is it going to be rented out by the family members? Is it going to be sold on? So there'll be questions around it, and the shared access sometimes can cause as an issue. But it's one of those ones where it's worth just chatting it through with one of the BDMs, and we'll sort of give you, based on the information that we know about our policy, to really give you guidance as to whether that's going to work. But yeah, we can consider plots that are being built in the back of people's gardens. You know, they just want to move their house and make it a bigger footprint in a bit of extra land that they've got. Okay.
Gavin's asked a question. Gavin, I know I think we know that we do expat mortgages, but I wonder if you mean expat self-build mortgages. So I'm going to ask that question of Holly. Holly, do you consider expat mortgages for self-build?
Not for self-build, no. The only expat product we've got is on our buy-to-let range. So yeah, nothing on the self-build front at the moment for applicants that aren't living in the UK.
No worries. Andrew, I am going to come to your question, but it's a little bit on the subject we're talking about a little bit later on. So I haven't forgotten about you, so don't panic that answer. We are coming back to that. So Holly, let's talk about stage payments and the process and how it works, because that can be a little bit confusing. Or maybe the guys don't know how this works. Can you explain it to us in relative layman terms?
Yep, and I'll try and speak at a steady pace on this one. So with our stage payments, we don't have the old set stage payments that we used to have, because we take on projects midway through or a different type of project. The stage payments don't work. So the way that we do is we actually do it flexible based on the products, what the applicant needs and the project themselves. So what we'll ask is guidance from the broker as to what stage payments the applicants are looking at and looking for, and then you'll work during the application process and underwriting process. We'll say, yeah, okay, that's going to work, or that's not going to work. Okay, we might need an extra stage payment here. So with all self-builds, the minimum is one initial drawdown and one stage payment. But for those complicated cases, we can do, there's no maximum on how many stage payments there is. So there is a re-inspection fee every time a stage payment is to go out, check it, the work's been done, and then we'll lend the money back to them because we lend the build costs in arrears. But yeah, for it, it's just we work with the applicant and what suits them really on the project.
Okay. We've got an extension on that, Holly, from something you said from Fiona. When you say you'll take a project partway through, at what point would it be too late? Had a previous case refused as already wind and watertight?
So it's on a case-by-case basis. So one of the key things we say when we're taking on a project midway through is how close is it to completion? Is it habitable? If it's habitable, it's not going to fit on this range. But if it's just that, it's been built to a certain level, the construction types within our policy, we can look to take it through. But what we may ask is for a quantity surveyor report on top of the standard valuation report, just to ensure that the works that have been done have been carried out to a good level. And then we're happy with it to continue onwards.
Lovely. Luke, no question for you, Holly. How much is the re-inspection fee generally?
At the moment, the re-inspection fee is £195 a time.
Okay, Luke. Perfect answer. So let's move on slightly. We're still talking about the same subject. Let's talk about the new products, because they are more grand designs, right, Tony?
Well, yeah. So we're delighted that we saw an opportunity to support those self-builders with large aspirations and deep pockets, and looking to build properties and looking to borrow between £1 million and £2 million. Now we already do a number of these already, because we obviously our current product goes up to £1 million, but we do go off over that level and bespoke up to 3 million plus. Okay, so we decided that it would be useful and for brokers to understand that there's actually a product out there visible straight away. So we launched the self-build large loan. So yes, again, it can be for whatever someone wants to build, but generally if you're building your own home from between £1 million and £2 million, it's going to be pretty special. And we're already getting applications and a lot of inquiries. So one of the things we're hoping to do is to be able to provide case studies going forwards that we can share with our brokers, so that they can understand the kinds of things and how projects work if you're new to this market. It really helped.
Brilliant one that was built on acres and acres of land that their parents had. It's a project that you guys did. And I couldn't believe what they got for their money. I was genuinely blown away for what was just over £1 million. I think it was 1.2 million. But the house was incredible, like absolutely incredible. You just don't realise what you can get for self-build, do you? No,
it is. The biggest, a lot of the time, the biggest cost of in a project is buying the land. The actual purchase of the house is considerably more economical than buying the land. So yes.
Okay, Ollie, questions coming for you. I'm going to stick with this just for a minute, because I'm going to try and keep them as they're coming in. Andrew would like to know how much cash should the client retain on deposit as a percentage of the build costs?
So products-wise, they're structured in two different ways. You've either got slightly cheaper rate products that are structured at a 65% of purchase price, will end up to 65% of purchase price, 100% of build costs, and cannot exceed 75% of the gross development value. Alternatively, we do have a slightly more expensive product which allows 80% of purchase price but only 80% of build costs, and cannot exceed 80% of the gross development value. And what we want to see on the majority of projects, especially on the large loans, is that they have about a 5% contingency fund factored in, just in case anything goes across. So that's one of the real key stipulations of the large loans, is that they do have to, within the contract, if they go for a fixed price JCT contract as well, we'll need to see a 5% contingency within there, just to allow for anything to overrun.
Lovely. Just talking about green, which is a big subject matter at the moment. The country's been on this road to net zero emissions, and people are very conscious about where they live, what they're contributing to global warming and other climate disasters. We mentioned earlier that self-build is a way of kind of controlling how efficient your home is. How effective are, you talked about sort of prefab and some other forms of building. Are they available in the green space as well? And would you cover that with the mortgage?
So I mean, with the green mortgages, it is a focus on the construction, but it's also the materials within it. So, you know, you've got your heat source pumps from the ground. You can have different types of roofs. You can have different types of walls to keep it warm. And there's all these different things that they can come out. So, you know, it is usually, most new builds are factored in to have a good EPC rating and be more eco-friendly. So yeah, I think it's something to consider. And the passive house construction methods, that's a whole construction range of different types of green ways to build. So there's a lot out there, and there's a lot of new things coming to market as well, with ideas and plans that sort of you can see online, or you know, even down to, we mentioned it a lot at the Grand Design Show, there's a lot of eco builds on there and different types of methods. So yes.
Is there anything you won't lend against on a self-build? Any methods of construction where it's definitely a no-go?
Stumping me with this one. I think your first time you've got me. No, I think
isn't it the first time? Tony, can you answer, or should we just go
no, to be fair,
some.
Yeah, there will be some, obviously, but yeah, Holly, there you go. Given the time to think, you got some.
Yeah, so you've got corrugated metal roofs. So, for example, a project we've seen quite recently is one where it's still going to look like an old steel frame barn. So if it's an old steel frame self-build, so they're just converting, say, a cattle barn, some planning stipulations for that now has to keep the original appearance. So things like that we wouldn't necessarily do. And also when it's 100% sedum roof, so it's the planted wild roof, we won't help with that one either. We'll only allow a percentage to be a sedum roof.
I think the reason you were stumped with that question is because you are actually one of the most flexible lenders. That's what I was trying to get across, not to stump you. So I apologize, Holly. Is that where you may have seen self-build products with other lenders and lots of restrictions? Not the case here. It's very much a come to us because we're a lot more flexible than others. And I think, sorry, that was what I was trying to get across, Holly. So you were putting a stump there. We had some questions coming while we were dealing with that one. How much cash should are second home self-builds acceptable from Nigel?
Yeah, I'll answer that one. So we can consider them if they're second homes for personal use. We can look to consider, but we wouldn't allow them at the moment to be like short-term let out or something. If it's, you know, they're building by the coast and they're using it for their own personal use to have a nice little holiday home, then we can consider those scenarios. But again, it's one of those ones that's always worth running it through with us pre-submission.
Yeah, and that bit of policy is under review at the moment as well, around the use of second homes as a temporary holiday let. So we're looking at that, because at the moment our policy doesn't allow that, but we are looking into that at the moment.
Okay, that's good to know. Another question is from Ritesh. Would the client require a new build certificate on completion?
Yes, they would, and they would require the correct warranty. So there is a list of warranties on our website, but some of the ones that you'd be looking at are NHBC, BLP, Build Zone, LABC, but the list is endless, I'm aware of. Just quickly run through those. And also we are reviewing the list as well. So there is ones that aren't necessarily advertised on our website that we would consider. Advantage warranty actually being one that we've recently considered with our underwriters. So, you know, just send the project through to us, let us know what warranty it is, and we can obviously see whether it's something the underwriters would be happy to consider.
Very specific question from James. Will you consider 100% timber clad?
We can, but only when there is an internal masonry skin.
Hopefully I answered that one, James. If you've got a further question, feel free to bring it over to us. So let's go back to, I forgot my trail of thought this time. Could you have a first-time buyer as a self-builder? So if I'm younger than I actually am, 25-year-old couple, looking to get a new home, have this aspiration, I want this ultimate green home, designed how I want. I've got baby on the way. Am I acceptable as a first-time buyer?
Our self-built product is available to first-time buyers. That's one of the key things.
That's quite unusual, is it not?
Yeah, I think, we wanted to make it an option because it's hard sometimes to get onto the property ladder. This gives them another option where they can, a cheaper building cost actually for what they can get, they can build a lot more for their money. So it just felt unfair to ever stop them being able to apply on this. The key thing with it as well is for the first time buyers is, we might ask them that they have an external project manager, just because if they've never built a property before and they've got no experience with the industry, we might ask them to appoint a project manager and not just do it themselves. So there'll be certain, key things that we'd look at and support that we want to give and suggest. So, yeah, that's one of the things with Saffron is, once the case is completed, we will stay in contact with the customer for the duration of the build, and if we don't hear from them for 3 months, we'll go out for a progress report just to really find out where they are, ensure that everything's going okay, and we handle the stage payments to come back to us. So once they have completed part of the build and they want the next tranche of money, they'll actually come directly to Saffron and request that going through. So we like to keep hands on from start to finish. We have internal notes about where a project is, so at any one time we can sort of say where our projects are and what they're looking at. So we'll try and provide help and guidance as best we can, even post completion. We won't just sort of leave them for the 24 months to build it themselves and then hope it's all done.
I think that's really important to note, isn't it? Because as a broker handing you a client and this product, I think it's really important to know that they're well looked after and they can be supported throughout with people who know what they're doing. But I agree with you. I mean, I've a couple of my friends did a self-build and they went out and found the perfect project manager for them, somebody that really understood what they wanted and somebody who really understood the industry. But they would have been a shambles had they tried to do it themselves. They struggled enough to manage their project manager. So, yeah, I think that's really key advice. Question from James, again, based on the last one. Would you lend on outline planning to buy the land, Holly?
So we would allow a decision in principle to go through in a full mortgage application to get to valuation stage without land plan and permission, but we wouldn't be able to instruct valuation till full plan and permission's been granted. So you wouldn't be able to complete on a purchase just fully on outline plan and permission.
And do you have a higher lending charge, again, from James?
Between the projects, there is a different charge. So obviously the 65% product is slightly cheaper and the 80% being slightly higher. And all of these products do have a 1% arrangement fee added to them as well.
All of that information is available on the Saffron for Intermediaries website, guys. So do go on and have a look. So I've just checked, all the details are there. So you can have a look at the two different types of products. You can see the new products on there as well. So this is from Sunjob. So I haven't read this ahead, Holly, so bear with me. Would a single self-build mortgage cover a client that is looking to renovate a site with multiple buildings to create a home, a detached garage and a detached home office? Quite specific.
Yeah, no, it's one of those ones we could look to consider. The only thing I would say is the detached home office is more got to be for a work from home rather than running a business through, so it's not semi-commercial. But other than that, yeah, it's, garages, it would just be part of the house effectively. And if it is detached, it's the home office that we just need to know it's just for their, like we all are at the moment, working from home.
Brilliant. From Jan again, welcome back, Jan. What are your age limits for self-build lending, Holly or Tony, whoever wants to take it?
Yeah, so sorry, Tony, I'll steal that one off for you. So for the for the maximum age, across our whole product range, we don't have a maximum age. We do have a maximum term based on ONS statistics. So as morbid as that sounds, it is based on life expectancy. So just give the BDM team a call, let us know the age of the eldest applicant, and we can tell you what the term would be. What I would say, though, is we will only take the term with working income up until the applicant's intended retirement age or 75th birthday, whichever is sooner. And if they have a manual job role, we'll restrict it to their 70th birthday. So, we can consider to the first-time buyers, but also the older borrowers looking to do that self-builds as well.
Lovely. So just, I'm going to go right back to Andrew's question from a while back because it is based on affordability, and he asked about self-employed and how you look at self-employed accounts. Could you explain the self-employed process to us, Holly? So what you're looking for, I think I'll do the exact question now. Do you work from the tax returns to self-employed applicants, or are you willing to look at undrawn income like net profit or profit before tax and retained profits?
Yeah, so for our self-build, for our self-employed income, okay, self-build on the brain, self-employed income, if they're 100% limited company director, or they both applicants make 100%, we can look at the net profit after tax and salary for affordability. If they are less than 100% shareholder, then we will look at the salary and dividends, and if they are less than 20%, they're treated as employed. What we would do is you do have to have a minimum of 3 years of accounts to go on our self-build product range. And our system is now designed after a change that we made just before Christmas, that if there has been a year-on-year increase or a year-on-year decrease, we'll take the latest year's figures for affordability. And we'll also, if there's been an average, we then take we'll look at the fluctuating profits and take an average.
While we're staying on affordability and income, what's Saffron's take on furlough from Fiona James?
Yeah, so for us, what we will be looking at is to know, find out a little bit more about what industry that they work within, and then we'll do an affordability assessment based on their return to work income, but also what their income is during furlough, just to ensure that if they take out the mortgage now, what financial impact would it have whilst they're still on furlough, and obviously make a decision from there. So we didn't really change our policy due to the pandemic. We didn't want to, we just didn't change our product, and we've been really flexible on the furlough stance. A lot of people are returning, but we know that the scheme is still open until September at the moment. So we've just tried to take it on a case by case, but the basics are we'll work at 2 affordability calculations.
This really does go back to what you were saying, Tony, doesn't it? On a bespoke and
it's just common sense. If we can look at it and we believe it's affordable, then we'll most likely say yes. If we don't think it's affordable, we'll say no and explain why.
Lovely. Okay, so another question from Mark Jackson. Does the client pay interest only during the build and then change to repayment when done?
Yes. So there's 2 options. So you have interest only, where they'll need to have a suitable repayment vehicle at the end of the mortgage term. Alternatively, you can take a repayment mortgage, and we do offer a perk whilst they're doing the build. So during the build, we'll only charge them interest only. And then once it's completed and signed off, then it will go to repayment. So within those 24 months. But if they want to do that, you have to put it in your suitability letter to the client, and it doesn't show on any documentation until you get to offer stage, and it will show as a special condition. So that interest only manual payment adjustment is only shown at offer stage. So
Fiona has responded saying she's really interested in the furlough stance. Fiona, we'll give our contact details at the end of the webinar for the general team, and then somebody will come back to you straight away. They're very quick to respond, so we're glad to help. So Fiona, just listen towards the very end, and we'll give out all the details right at the very end so you can get in touch with the team. Suntalk has come back to us again with, under the self-build mortgage, could gifted deposits be used for emergency funds?
Yes, potentially. We allow gifted deposits from immediate family members. We allow gifted deposits and gifted equity. So, if the parents are gifting the land, for example, we can consider it there. It might be better structured if they did the gifted deposit to help with the purchase of the land or to help them get started, which then means the client retains some of their funds for any of those emergency situations. It's just the way it's a cleaner way to structure it slightly, but it depends what suits the applicant's needs. But gifted deposits, gifted equity are fine as long as they're from immediate family members.
Lovely, thank you. That's really useful because that was a question I was going to come in with. Guys, we have got a poll open, and I see that I can't tell how many exactly have answered it, but I see quite a few of you have answered there. So if you wouldn't mind clicking on the poll and just giving us an answer, because we're trying to make sure that future episodes of SFI Live are directed at what you want to know. And if we've got, there's a break in your knowledge base and we've got the information we can give you, we'd ideally like to do that. There's 3 options currently on there. if you'd be kind enough to vote, it would be amazing. We've got about 20 minutes left, so this is the last chance to get your questions in. So pop your questions across, and we'll put them to Tony and Holly. Any questions we don't get around to, we will email and confirm at a later date. We've got some more in. From Nigel, is the sale of another property acceptance as an interest-only repayment strategy acceptable?
Yes. Yeah, we can consider background properties as the repayment vehicle.
Lovely. Right, so that's covered quite a lot in self-build. If we have any more questions on the self-build products, do give us a shout. As I say, all the information is on the website. So I'm going to drop in here. If you haven't signed up for the portal at Saffron as an intermediary, please do sign up on the website. Get involved in the portal, because it does open up communication from Saffron on a lot of these topics. So, you know, we are generating a lot of content that's being sent out. So you could be missing out on little tidbits that we give away in these webinars. They could be sent on a more regular basis. So do get yourself signed up. It's just in the corner of the screen as you go to the Saffron for Intermediaries website. There is massive updates on there. All the products are on now. There's loads of it. I think you've probably got more affordability calculators than I've ever seen on a society's website. So there's so much going on there. So do feel free to give it a shout. So let's move on slightly to other areas of interest. Tony, we've been talking quite a lot about flexibility and what's going on. And how do you see the market changing as we go through the next few months? Obviously, we are due an end to this extended SDLT holiday. Has buyers still got time to take advantage of that?
Well, I don't think there's probably any time if you were starting to look at a purchase now, with obviously the end date being the end of June. But you know, I think the best thing to say in this current world is who knows what decisions can be reversed and changed at any time. You know, when you've got to look at foreign holidays to decide on, you know, three ministers with three varying views yesterday, which was a challenge. So you know, it's an interesting market. It's still extremely busy for brokers and lenders. And you know, I think there was a poll yesterday asking around, is it going to be a record July or a quiet July? You know, I generally don't know. I think we are in this bubble of people trying to take advantage of a stamp duty holiday, which inevitably will see a slowdown at some point, because that bubble will burst. You know, when that'll be, I don't know. You know, I think what the pandemic is showing people is that there's different ways to live and different areas to live in, and people are still very keen to kind of slightly move away from urban development into more suburban or even, you know, rural settings to feel more comfortable and safe. So who knows, really?
I think, you know, the fundamental shift in the way we're working, we've mentioned we're working from home. When we come into the hybrid model, I know you guys have had a news story out saying you're working with a much more flexible working system in place. It means you do consider where you live. I've considered my house. You know, I've been quite comfortable here until I've spent a year sat at a desk. So you start looking, going, could I do with a bigger house? Do I need a spare room to turn into an office? You know, it does open up, and I think that's a lot of it. Have you seen an increase in applications for self-build during the pandemic, Tony, or do you think that's still to come?
I think it's still to come. I mean, you know, we're strong in self-build anyway, so you know, pandemic, no pandemic, we've all, you know, this is we're a known specialist in this area, and hopefully, you know, a few more people will know from us, you know, will know more about us from today. So, but I think, you know, the Help to Build scheme is going to help awareness further. You know, a lot of people, as I said, see building their home as own home as his aspirational pipe dream, but actually it is a reality, and it's becoming more of a reality for more people, particularly when you consider custom build as well, you know, which is the, I suppose, slightly less hands-on way of building your own home by getting a professional developer to do it for you to your specification. So I think, you know, and the government is going to keep pushing the agenda for self-build and custom build, and that's why it's freeing up and encouraging local authorities to free up brownfield sites, because they want us to start becoming a bit more like other countries, where you've got up to 85% of new homes in certain developed countries are built by, you know, on a custom build basis. So that agenda is going to grow. You know, we need more small SME builders, you know, finding plots of land and enabling people to build their own home.
And I think I think it's positive. I mean, I've seen the quality of what's been built in other countries, and certainly Australia, weirdly enough, Australians are really good at it too. And it is that the ability to, it's moving away from the rows of terraced houses you're used to seeing in this country of used houses that are all built in exactly the same spec, and just making things that are good. And it's good for buyers to selling on as well, because it's lovely to go onto a site and look for a home that you wanted, and look for a 3-bedroom house and see this completely unique build that's in your price range. You think you'd never get that anywhere else. So there are some positives to it. I've just had a text. Very weirdly, somebody's decided to text me on the chat box. I don't know if I'm having technical problems. Just saying, can we go through the self-employed criteria again, please? Because I didn't catch it. Sorry.
Yeah, of course. So for the self-employed itself, the applicants would need to have 3 years accounts to be eligible for this product. But in general, we can, on our self-employed product range, for standard purchases or remortgages, they can have 1 or 2 years of accounts. And we have recently changed our criteria back at Christmas to just look at the affordability, the way that we take it. So if they're less than a 20% shareholder, we will treat them as employed. If they are a limited company director with a 21% to a 99% shareholding, then we'll take salary and dividends. And if they're 100% limited company director, or both applicants make 100% limited company director, we can look at the net profit after tax and salary for affordability. And our system is built to take the latest year's figures if there's been a year-on-year increase or a year-on-year decrease. And then if there's been a fluctuation over the last 3 years, then we'll take an average of the 3 years figures.
Okay. Quick question on that subject. The text is following up. I literally texted while you're talking. Next question from Mark is, does it take into account any loans and grants that they've had if they haven't spent them?
Yeah, so what we'll be looking at is, especially with the grants, it's one of those ones, just like furlough, we haven't really changed our policy on. It's that case-by-case common sense approach that we're looking at. So you'll be looking at just finding out why they've taken it. Are they back trading now? Have they been back trading? What do the last 3 months business bank statements look like? Has that industry been affected, or what's the likelihood of going forward? And something we're doing internally as well is just really reassessing how we look at self-employed, but at the moment it's on that case-by-case basis, just really trying to find out a little bit more about the scenario the applicant's in.
I don't think we can scream that enough about this case-by-case and common sense approach, also because it's not everybody sticks to a set pattern, do they? There's nobody's got a direct answer as to how everybody's lives are, and I think it's a credit to Saffron, the fact that you look at it all on a case-by-case basis and you take that time to do that.
Yeah, I think, and I'll just add to that, Jay, in terms of the fact that we can bespoke products as well. So if we have an opportunity, we see an opportunity, but actually it's probably a slightly greater risk than our product pricing would determine, the underwriters have the ability to do it for you, but maybe bespoke the rate or the fee, so they can add a bit on to make it more palatable for us. And we do, we're quite open to doing that, and we want to do more of it. So even if you think we can't help, it's worth a conversation. We might surprise you.
Brilliant. I was going to ask a question about the BDM team, but I'm going to do that in just a minute because Andrew's popped a question in. Should we run the new inquiries with the BDM team before application, or do you look for the packaged application to fully consider anything?
So I definitely would. Oh, no, Tony, if you want to go.
Yeah, you go and I'll follow up if I need to. Surprised you.
So what we'll be looking at is that we would say always give the BDM team a call through. So I mentioned right at the beginning, we've expanded the team now. So we have 2 field-based BDMs, which we are in the process of going through all the postcodes and the split between them, but it will be like a north and south region. And then we've also got the telephone-based BDM. So you've got Debbie, Sophie, Raji, and myself. So there are 6 people to chat through your application with. And we always say any questions that you have, just get in contact with us. We've switched on our live chat function now. So the team have always got a live chat box, which I can see is pinged on and available right now on the SFI website. You've got telephone, you've got, I'll share with our mobile numbers as well after this call, so you can speak to Simon, Phil, or myself. And you've also got emails, so you will be able to get hold of us, and we're always happy to chat through. And if there's any questions that we haven't come across before as a case that we need to run through with our underwriters, we can. Just because we're not in the office with them doesn't mean that we don't badger them on Teams 6 to 10 times a day per person. So no, and they're really helpful, and they're always happy to run through documents. And if there's anything on a decision in principle, for example, that you've submitted and got any questions or want something to be looked at, we can have a look at it for you. And if there's a bit of caution behind, you don't want to progress to full mortgage application until you can see that this one part of the case is looked at. Again, we've got such a good relationship with our underwriters. They are all happy to help, and they're all happy to pick up and really just help you get the best results for the customer. I don't think I missed anything.
No, I was just gonna add in to the second part of Andrew's question, which is, look, if you've read our policy and you think it's all okay, then there's no need to ring us. Just submit it, and the sooner we get a package case, the sooner we work on it. So how our process works is we will look at your DIP, say yes, wait for your application to come in, and once you've submitted that, we won't look at it until you provide all the documents that we've asked you to provide. So the sooner you get all those in, the better. And also make use of the notes functionality that you have on our system. The beauty of common sense is that it's not obvious. So sometimes cases aren't obvious to us. So tell us the story, make it obvious to us what it is you want us to think about if it's not standard. But what I would say as well is, we are constantly developing our website because we want you to be able to look at that and have all your questions answered without having to ring us. We do love to talk to you, but we know that you don't always want to talk to us. You're busy people, you want to get on with life. So if there's anything on our website that's ever missing, do let us know, because we're constantly reviewing that and updating it. And we're currently working on guides to help you get your cases right first time and understand the process so that it's better for you and that we're easier to do business with. So, we do a lot already, but it's just going to get better.
Okay, thank you. Just on that and keeping in contact, we discussed adding to the portal and signing up to the portal and getting the regular emails. It might be worth going on to LinkedIn. If you don't follow already, there is a Saffron for Intermediaries page where we put all of this information, keep you updated on product changes, let you know about the webinars that are coming up, all those various things. It's on LinkedIn. If you just type in linkedin.com/saffron-for-intermediaries, don't worry, I'll send that across to you. But just search for Saffron for Intermediaries on LinkedIn. Follow that page because it's the most active we have. It links directly to the website, but it does give you a lot of insight into what's happening. As Tony was saying earlier about case studies with self-build, that's the place you're going to see it before it even gets on the website sometimes. So if you want live updates, then definitely give that a follow. Saffron for Intermediaries is also on Twitter, so again, just do a quick search. Okay, so get that bit out of the way. We'll give out all the rest of the details at the end, though, so we'll talk about those. We've only got a few minutes left. And Joanna, yeah, sorry, I was just about to mention this. If you would like a certificate to prove your attendance of the webinar towards your CPD, drop an email to marketing@saffronbs.co.uk or drop a comment in here. We'll download the comments and we'll make sure a certificate is sent out to you. You can use that towards your CPD points. Next month's webinar is still to be decided on the subject. So we've got the poll out. Currently, reasons and benefits of working with Saffron's in the lead, followed by green, finance, and the future. Nobody wants to meet the team, Hole. Only kidding. Not as popular as the other two. That's what we said. If you would like to see anything specific, use the chat box now. Do feel free to pop in there. Do you know what? I'd really like to know about this, or I really don't understand this, or I really got a knowledge gap here, or this will really benefit me. We're going to combine them all and then make a decision on what the next one will be. But because we are monthly, right up until the end of the year, I think it's vital that we get these right and they're suitable for you. Thanks, guys, for putting your CPDs in. I've just missed someone's question. So from Jason Holly, if a client has changed their company structure from sole to limited, what would you need to evidence continuity?
Need 1 year's full accounts as a limited company.
Short but sweet, but straight to the point. That's fine. I think we're pretty much covered on self-build. We're covering everything else. We will update you and let you know what, when and where and how to get to next month's webinar. If you've got any additional questions, Holly, this is your chance. Maybe the phone number and the email for us, please.
Yes, so the main telephone number is 01799 582 925, and the email address is bdm.enquiries@saffronbs.co.uk.
Wonderful. Well, I hope you enjoyed today. We try and keep these as relaxed and as fun as we can, and it's a chance for you to learn from the specialist. We are changing up. As anybody joined us last month will know, Holly wasn't with us. She was on holidays. We had 2 new guests with us last month. Next month, it may be somebody else. So just keep an eye out. We're getting all your requests for your certificates. We'll collate all of those and they'll be passed on to the relevant people in the team. But I think that's pretty much us for this month. Any questions? Obviously, Holly's there. We can't stress enough. Have a look at the Saffron for Intermediaries website. Have a look at the updates that are on there. Look at the new products. Sign yourself up to the portal. Get yourself on that mailing list, so you are getting as much information as possible. I don't think I've ever seen so much information going out from Saffron, and it's not gump, it's useful stuff. You know, it's not going to trad your inbox and fill your space up. It's there to help you. So do feel free to sign up for those, and we'll be back in June. Can you believe that? June.
Wow.
So thanks for everyone's support. Thanks for joining us today. Thanks for your support since January this year as well. And we look forward to seeing you next month.
Thanks, everyone.
Take care, guys.
Have a good day.
Yeah, bye now.
Bye.